Welcome back. You're tuning into Market Fatafat, where we're getting you all the top buzzes in trade today, either on the back of news flow or on the back of technical charts. But before we resume all the buzzes in trade, let's talk about the big entry of Tesla into the Indian market, and the wait is finally over as the electric car maker Tesla has officially entered the Indian markets today with its first showroom in Mumbai's Bandra Kurla complex. This flagship showroom, also referred to as Tesla Experience Center, is expected to be followed by more outlets in major metros including New Delhi. Now, the move comes as Tesla looks to explore new growth markets amid slowing demand in the established territories. The showroom is currently showcasing the Model Y, Tesla's all-electric SUV, which comes with a price tag of rupees 60 lakh.
Alright, let's get started with all the stocks that are buzzing in trade today. On the technical side, we are now joined by Mr. Akshay Bhagwat, Senior Vice President, Derivatives Research at JM Financials, and Kanishka and Rabinder are still with us to discuss the news flow-based stocks that are in focus. But Akshay, coming to you first then, Hero MotoCorp, tell us, where do you see the stock headed and why have you picked up this stock today?
Good afternoon, Ashisha. So, yes, Hero MotoCorp has seen a very strong intraday move as we see a 4% gain today. And even if you were to look at the broader charts, if the last few weeks were to be seen, I think 7 to 8 weeks have gone by where the stock had been stuck in a range of around 4,300. And absolutely the volumes were pretty dull, but the longer term chart somewhere had a very strong nature to it of a further continuation of the rally, and that has unfolded today. So my belief is that 4,500 is the immediate slight hurdle which the stock might face, after which this sets up for a target of potentially 4,700 to 4,750. So Hero MotoCorp has a positive setup for target still 4,700 to 4,750 zone.
Okay, so Hero MotoCorp in focus, 4750, those are the kind of levels we could see. But shifting focus to the IT sector yet again then, and Tech Mahindra, it will be reporting its numbers tomorrow, and we are expecting subdued set of numbers for this IT company as well after TCS and Infosys. In fact, Infosys will also be reporting its numbers in the few days to come. Revenue growth could see a decline of about 1% on a sequential basis in constant currency terms due to muted recovery in telecom and manufacturing. Remember, these segments contribute nearly 50% of the total revenue, and we are expecting muted set of numbers from there as well. Communications vertical has stabilized, however, recovery is likely to take time. Margins are expected to rise by about 20 basis points, supported by lower subcontractor costs and SG&A efficiency. In fact, we also have Pulkit now joining us to take us through what the street is penciling in as far as Tech Mahindra numbers are concerned. Pulkit, over to you.
All right, I guess we've lost Pulkit, but let's move on to the next counter then. Kanishka, you picked out Deepak Fertilizers and Petronet LNG for us. Take us through what's the news flow on these counters.
That's right. So, Deepak Fertilizers has entered into a long-term agreement with Petronet LNG for the regasification of liquefied natural gas, that is LNG. The contract, valued at 1,200 crore rupees with the potential additional outlay of up to 20% over its 5-year duration, will see Petronet LNG regasify approximately 25 TBTUs of LNG annually, primarily at the Dahej terminal after an initial ramp-up period. Now, the regasified gas will be supplied to DFPCL's manufacturing facilities at Taloja for internal consumption. Petronet LNG will primarily utilize its Dahej terminal for the regasification process. The contract involves an initial ramp-up period, after which the full annual capacity of 25 TBTUs will be regasified. Now, the gas will be used internally, as I said earlier, and on the back of this news piece, both the stocks continue to be in focus, are trading in the green.
Okay, so that's as far as that stock is concerned. But shifting focus to Tata Tech then, Rabinder, tell us what is the news flow over here? I believe it's numbers.
Well, yes, on back of the Q1 FY26 earning, Tata Technologies is in focus. The company reported a revenue at rupees 1,244 crore, which was down by over 3% on a sequential basis, and EBIT also saw a decline of more than 16.5% on a quarterly basis. And the company reported EBIT margin at 13.6%. And CEO said that they remain optimistic about a sequential recovery in Q2 and a stronger second half of FY26, and that deal pipeline today is more robust than a year ago, and the early momentum they are seeing provides great visibility and conviction in improved conversion through a year. And CFO said that they are continuing to invest in the priority area, maintain financial strength and drove efficiency across the value chain. ICIC Security has come out with a note on Tata Technologies, and they have maintained the sell rating, but they have hiked target price of ₹510 as compared to earlier target price of ₹480. They say that the aerospace continue to propel strong growth momentum, and they have increased FY26 EPS estimate by 0.6%. So on back of the mixed Q1 FY26 number and strong management commentary, stock is up approx 1.5%.
All right, moving on to the next counter from Tata Tech to Varun Beverages is what you picked out for us. Akshay, take us through what you see on the chart. This counter is trading with gains of more than 1.5%, but this stock has been correcting on the charts, right? It has been consolidating. So what do you see on the charts for this counter?
Yeah, so FMCG is the sector in the limelight. If you see, most of the stocks are slowly picking up pace in the last few trading sessions. We are noting long additions in the FMCG space, and if Varun Beverages has to be seen at last 4 weeks, one thing is clear on the charts, that there is a very strong support base which is formed at the levels of 450. Now today the stock has caught momentum. Yesterday also there was good momentum for 450 levels, and there's a small hurdle at 470 which should be breached. The probability of this break of resistance happening in the short term is very high, and the way the charts are setting up, targets of 500 to 520 seem most probable in the very short to medium term. So with a stop loss of 440, one can consider buying Varun Beverages or hold Varun Beverages. I'm optimistic that 520 should be on the card soon.
20 should be on the cards. That's the technical view coming in on Varun Beverages. But Kanishka, a whole host of energy stocks are in focus, the likes of Tata Power, Adani Green. Tell us, what is the news flow here?
That's right. So there's no particular news flow, but the government has actually shared a very key milestone that India has completed, because of which energy stocks like Tata Power and Adani Green, they are in focus today. It's because India has achieved a major clean energy milestone that's hitting 50% non-fossil fuel capacity. That's a full 5 years ahead of its target as per the government statement yesterday. Now, India's total installed power capacity now stands at 484.8 gigawatt, with 242.8 gigawatt coming from non-fossil fuel sources like solar, wind, hydro and nuclear. Now, this development signals strong momentum in India's energy transition, boosting sentiment around these renewable-focused companies. Hence, these companies are in focus today, trading mixed, however.
All right, moving on from the power companies, then get you some ET Now exclusive then. Sources are telling a channel that the industry may be looking at a relief for LNG operators as the government is mulling changes to the existing rules for the terminals. My colleague Prakash is here with details of that.
There's a big relief expected for LNG operators in the country. A very crucial development coming in. We are given to understand that the government is likely to make changes to existing rules related to LNG operators. We're given to understand that provision of common carriers in LNG terminals could be removed from the regulation. Provision may be scrapped by amending PNGRB rules. Along with that, sources are also telling us that the process has been initiated. In fact, the Oil Ministry has initiated discussion on the proposed changes, which is very crucial, especially in the context of recent regulation issued by PNGRB for LNG terminals, where industry has raised concerns over certain provisions in the regulation. In fact, they are not in favor of mandatory common carrier provisions in LNG terminals. The process has been initiated, which is beneficial for LNG operators in the country. In fact, the government is also trying to address the tariff-related issue by removing common carrier obligation.
Prakash, thanks so much for joining us with all those details. But let's shift focus back to equity markets then, and ITC that is in focus. Akshay, currently trading at 421. Where do you see the stock headed?
Yeah, so ITC Limited, if you look at the price charts again, last 5 weeks of consolidation, a strong support base forming at the levels of 415 odd levels. And the stock is setting up slowly for the immediate resistance band, which is around 427. And the way the price setup is, the charts are signaling that in the short to medium term, the stock may test targets till 440, 445. So 440 and 445 are these two targets which you can work with from a short to medium term, maybe a time horizon of a month in ITC. The probability of this target setting look high, and the stop losses as a risk management can be kept below 410 on this buy trade.
All right, moving on then. We told you that auto stocks are in focus on the back of the SIAM data that has come out. Shailesh Chandra, who's the president of SIAM, speaks about the issue of rare earth supply shortages. He said that he remains hopeful of the issue being resolved in the near future. He also touches upon the scope of revival of consumer demand. Listen in to the excerpt of this conversation we had with him.
One is generally a slow quarter for the industry, and therefore you see the reflection of numbers which are slightly less as compared to an average what you would expect during the year. But I would say that if I go slightly category wise, two-wheeler, I still believe that it should do better out of all the categories because the retail growth or registration growth has been positive, although the wholesale has gone down by 6% primarily because of inventory correction. But I think if you see the factors which are going to really support the demand, it's the repo rate reduction by 100 bips translating into lower interest rate for the buyers there, or the rural demand, which is severely impacts the two-wheeler industry. That should do well with a good monsoon. So I think there are tailwinds at least in two-wheeler category. In commercial vehicle also, I think the infra spending and replacement demand should support the revival to some extent in the H2 of the financial year. For passenger vehicle, again the same set of rural driver as well as repo rate should help, and a strong festive period that we are expecting. So I think broadly, if you see, H1 might be a bit muted. We expect that with some of the these tailwinds which I mentioned, H2 should be better.
Going forward, as you've mentioned, the demand environment to improve, but do you see any sort of concerns on the supply side, especially now we have the rare earth magnets also come up as an issue. So on the supply side, how are you seeing things pan out?
We'll have to see, rare earth, how, we are able to finally resolve the issue. But right now we are dependent on inventories as an industry. And there are ongoing discussions which are happening with the government of India, who's very actively supporting us to resolve the issue. And on the other side, the importers have also applied for about 30 applications have gone. And they are reaching out to the Ministry of Commerce there to get the approvals. So we are awaiting that. So the government is assisting us in this whole process. So we are hopeful that it gets resolved. If it does not get resolved, it can create disruptions, no doubt.
That's the view coming in from SIAM President on the outlook for the auto sector. But we need to slip into a very short break. We'll discuss many more buzzers on the other side.
Association with SBI.
So TCS is another counter that is in focus today. Now remember, TCS had posted its quarter 1 numbers, and yesterday, post-market hours, they said that the priority focus is delivering wage hikes for its over 6 lakh workforce. My priority is getting back to the wage hikes, said the Chief Financial Officer, CFO Samir Saskaria, without specifying a deadline for the salary hike for its employees. And Saskaria also claimed that the company has rarely resorted to delaying wage hikes compared to its peers. Now, Saskaria also made it clear that TCS will focus on growth within profitability. Now, remember, earlier this week, TCS Executive Vice President and Chief Human Resource Officer Milind Lakkad said that the company has not made any decision so far as wage hikes are concerned. That's the first piece of news. The second is that the TCS has announced an interim dividend of 11 rupees per share, with the ex-dividend due date, which is set for 16th of July 2025. On the back of this, TCS is in focus today, trading upwards of 0.5%.
But shifting focus to Railtel then, and Rabinder, the stock is in focus on the back of an order win. How big is the order?
Yes, Railtel Corporation of India is focused on the back of the order win, where company has announced that they have received a work order of rupees 264 crore from East Central Railway for implementation of the Kavach system, and the project involves deploying Kavach over 607 route kilometers of the low density railway track under the jurisdiction of the East Central Railway, and the contract is scheduled to be completed by July 14, 2027. So back of this order win, Railtel Corporation of India is in focus, and the stock is holding a gain of approx 2%.
Alright, electric car maker Tesla that has officially entered the Indian markets today with its first showroom in Mumbai's Bandra Kurla complex. Now this flagship showroom is expected to be followed by more outlets in the major metros including New Delhi. My colleague Shrishti Sharma is now joining in with the details.
Well, indeed, Tesla has finally made it to the Indian markets, and what we are seeing right now that they're going to be launching their Model Y, which is one of the best-selling electric models for Tesla across the globe, and in India, they will be starting with this particular model itself, with the price ranging anywhere between 60 to 68 lakhs. And yes, indeed, it's been a long wait for Tesla to actually enter the Indian markets, and finally this is through. And especially if you look at the range of this particular car, that goes to around 68 lakhs in terms of the rupee, but in terms of the range per kilometer, it's 622 kilometers of a range is what the company is giving in their variant 2, while the variant 1 is of 500 kilometers of range that will be coming up. Yes, in terms of the competition, that is indeed to be intensifying, because Tesla will actually be competing with the higher end prices of the vehicles, case in point being those with respect to BMW, Audi, that we have seen the variants over there. But other than that, in terms of the lower price band cars with respect to Tata Motors, MG as well as Mahindra and Mahindra, not much of a competition kicking in, because if we see the price variance there, then yes, the highest end is coming in for Mahindra and Mahindra close to that 30 odd lakh mark. So because of the import duties that we still have in India, Tesla prices are much higher, but it's also higher with respect to the kind of other countries what this particular Model Y is being offered with, because onto the screen it was what you were seeing that with respect to US, China and some of the other geographies as well, the Tesla's Model Y priced in India is actually at the premium end, which is actually higher by $15,000 as well if we compare the prices of this particular Model Y with some of the other geographies as well. So that's all about Tesla. The first showroom is through in Mumbai in BKC, but more showrooms are likely is what the Tesla team is highlighting, and going across, a new showroom could be there in Delhi as well. So that's all about Tesla, and finally an entry being made into the Indian markets.
Shrishti, thanks so much for joining us with all those details. But shifting focus back to all the stocks that are in focus, and Akshay, you've picked up Canara Bank for us. The stock is currently trading at that 115 odd levels. Where do you see the stock headed?
Yeah, so if you look at the price charts in the banking pack, somewhere, the PSU banking space is showing some pickup of momentum lately. And overall, Canara Bank has a very strong price structure. I think on the monthly charts, if you look at, there has been more of a one-way rally right from the levels of 80 to 115 where it currently trades. And the chart setup on a broader term indicates that the prices are heading to hit the swing highs of 130, which we hit somewhere in the beginning of the year. So in all likelihood, the short-term targets, if you're working, should be around 120. But if you give this some more time, 130, 135 look a better target from a slightly longer term holding in Canara Bank.
Right, that's Canara Bank on the charts. But moving on to HDFC Bank from the banking pack. Kanishka, tell us why have you picked out HDFC Bank for us?
That's right. So HDFC Bank released its FY25 annual report, which is why it is in the focus. Now, the bank has announced a strategic push into generative AI, that's Gen AI, to drive productivity and customer experience. In its FY25 annual report, CEO has revealed that the bank has moved from pilot projects to a platform-driven Gen AI strategy with over 15 active programs and the launch of a dedicated Gen AI Academy as well. Apart from that, the bank has also wrapped up its first full year post-merger with HDFC, reporting a strong deposit growth of 2.5 times faster than loan growth, improving its credit deposit ratio to 96% from 110%, with an 11% market share in deposits and a continued focus on asset quality. HDFC Bank plans to grow its loan book in line with the system in FY26 and even outpace it in FY27. And that's why the stock is in focus, trading nearly 1% higher.
So HDFC Bank in focus on the back of that, but let's shift focus to REC then. Akshay, from 399, where do you see the stock headed?
Yeah, so if you look at the price structure of REC, this is one more chart which has been in hibernation for pretty long. I think on the monthly chart, it's the fifth month where the stock has been confined in a very narrow price range. The lower end of the range is somewhere around 380 and the higher end of the range is 450. But I believe this is the fag end of a possible positive breakout which I am expecting on the price charts. I'm looking forward for immediate targets till 425. This is more of short-term targets and eventually 450. So REC is setting up well for targets of 450. You can work with stop losses below 380 on the buy position in REC.
All right, moving on to the next counter that is in focus, and that is ICICI Prudential Life that has just come out with its Q1 numbers. If you look at the PAT, that sees a rise of 302 crores versus 225 crores on a year-on-year basis. The APE is also up. The APE is down 5% on a year-on-year basis, and that's coming at 1,864 crores versus 1,963 crores on a year-on-year basis. The VNB, that's down 3.2% on a year-on-year basis at 457 crores, and the VNB margins have also they're seeing a mild uptick of 24.5% versus 24% on a year-on-year basis. So that's the result coming out for ICICI Prudential. This the new business has received a premium that is up 6.4% on a year-on-year basis. The solvency ratio also stands at 212.3% on a sequential basis, and the AUM is also up by 1.5% on a quarter-on-quarter basis. On the back of that, ICICI Prudential is currently reeling under pressure with cuts of 0.2%.
Okay, so the stock is under pressure after it reported its numbers. But Akshay, SBI, it is barely doing anything today, but over a period of last 6 months, it is up nearly 8%. Do you see the momentum continuing going forward?
Yeah, so what I understand looking at the price chart is that the stock is trying to stage a breakout of the upper end of the price band. Now, if you look at the monthly chart, I think last 3 months somewhere, again, this is one more stock which has been confined in a narrow trading range. It resists time and again at the levels of 820 and takes support somewhere around 780 odd zone. So attempting a breakout today morning, we had good momentum catching up in the initial couple of hours of trade, but again somewhere the momentum is fading out as we look at it right now. But gauging at a broader price charts, my sense is that the level of 825, 830, which is a resistance, should break out soon, and we should be heading for targets till around 870 in State Bank of India.
All right, with that, we're completely timed out on this edition of Market Fatafat. Akshay, Kanishka, Rabinder, thank you so much for taking the time out and giving us all the buzzers. With that, it's a wrap. Ashish and I will take your leave. Thank you so much for tuning in.